Hey guys, today I wanted to talk to you about the housing affordability issue out there and what's causing it. A lot of people are wondering, well, with prices going up, rates going up, all these things, when will the property values stop going up? Well, the question is not when it will stop going up because, you know, over if you take a chart and look all the way back into the 1940s, what you'll find is outside of the crash, which really should have never have happened, part of that had to do with a big part of that had to do with too much inventory, which we do not have a problem with right now. Across the country, you had about 4 million homes or just under 4 million homes for sale at that time, and not enough demand to eat that up. Now, you're kind of hovering way below that. Just to give you an idea, weekly back then during the crash, we had anywhere from 250 to 400,000 homes coming on the market. Now, you're probably looking at, more of like 30 to 90,000 homes coming on the market. And when you look at some of the levels, it's kind of stunning, as I've gone over in many of my podcasts here that I've done, where we talked about, the number of homes available for everybody across the country. At one point, it was like in the low 200s, 200,000s. And a lot of times when you see these numbers up there, it's just dirt. It hasn't even been built on yet, or it's in the process of being built. Maybe it just got a permit for that building project that hasn't even happened yet. And then a lot of those, by the time they go from, putting the permit into actually getting done, maybe a couple of years. So we have to look at, the fact that typically, and the only other time that we could say across the country overall, on average, that the home prices did not go up was 1990, besides the crash. And that was only like a 1% loss across the board, on average. So when we look at that, you got to say, well, then housing prices pretty much always go up. There's always sales no matter what the market's like. There's properties closing every day. But what is the rate of increase on the equity going to be? And what's causing it to be lower or higher or, up or down or whatever? And that has to do with how much supply we have versus how much demand there is, right? It's just supply and demand. So right now, it's estimated that we have a housing shortage of about 4.5 million homes. And at the same time, we know, and that's with basically, let's just say, using round numbers, over the last 3 years, we've had this recession in the number of home sales, not the sales numbers, but the number of home sales. So that's been hovering. Let's say, just say round numbers, around 4 million homes being sold the last 3 years, counting this year. Okay, and that's down from over five, from the crazy year, when we go back to 2021 and that sort of thing. And really, to get a really good look at this, you got to go pre-pandemic and all that. So, you know, what's the issue is, we need to build more homes, and by having more supply, you automatically will have more affordability and pricing, or the leveling off of the rate of increase in equity gains. So, there are some ideas on how to do that, but I want to tell you the number one way of doing having the builders build more homes is lower interest rates for a sustained period of time. They are offering so many incentives. I mean, they're closing costs. They got one deal right now where you get zero down, zero closing costs with a 5.5% average interest rate, which for down payment assistance is kind of unheard of, especially in our current climate with the higher interest rates that are hovering, any given time in the mid to high sixes or around seven. Right now it's mid sixes. But anyway, my point is, it's all about supply and demand. If you have one toy out there that everybody wants and there's not enough of it, everybody's going to fight over it on Black Friday and for Christmas for their kids, and or over the internet, now. So it's like, the kind of the same concept. So we have to have more inventory. And the builders are not the March of Dimes. They're in this to make money. Now their margins are around 20%, so they're not completely hurting, but they are starting to feel, some of the pressures of all the incentives that they've been giving and are giving and that sort of thing. So, um, in order to get more them ramping up, so to speak, their building, we need some of that. We also need to see better supply chains. We need to see. We're going to see from the president. He's been talking about less regulation. Obviously, we need certain regulations because we don't want homes to fall over, but allowing the permitting process maybe to be a little bit more fluid and easier to get through would be a great way to go. And opening up government lands he's talked about, which is going to definitely help the western part of the country more than the eastern part because there's just more of it available. But those things, lower taxes, those are all going to help better energy costs, which brings down the cost of all goods because it just costs less to ship things and even produce things, like lumber and stuff, because you got to turn the lights on, you got to turn the saw on, you got to turn, that manufacturing on, and that's done with energy, right? So, and gas and electricity and all that. So, those all those things are going to head in the right direction. Also, we have a Treasury Secretary that's going to be focused in on um, keeping the 10-year Treasury below 4.5%. So that's going to be a good thing because by doing that, we're going to keep it at least at a moderate interest rate level because the 10-year Treasury is basically going to be typically, if the splits are the way they're supposed to be, about 200 points, maybe 175 points difference in what the mortgage rates are. That's just kind of that slow dance that we've seen, like, I don't know, 20, 30 years, I guess, with the 10-year Treasury and mortgage rates. So the splits have been getting better. We had some little bit of volatility with those with the bond market, 10-year Treasury versus the mortgage rates over the past couple of months. The splits overall past year and a half gotten better. Uh, just those getting better are going to be good and with a better economy coming our way. So just that alone should bring down the rates quite a bit. As much as maybe mortgage rates, as much as maybe even 50 basis points or so from where they've been or more. So anyway, guys, hope that helps a little bit with those 4 million people sitting on the sidelines. That would lower interest rates and more better pricing available affordability, and the builders, giving that extra supply. I think we're going to see those 4 million people who've been sitting over on the sidelines over the next year or two or three. I think we're going to see them come back into the market, and I predict, low years have been 4 million homes. Higher normal years around 5 million homes that are sold, give or take a little bit. I think we're going to see a year where we have easily 7 million homes sold. You know, my prediction is in the next 2 to 5 years. Some people say 10 years. That are saying that. I think we're going to see it in the next 2 to 5 years. I really do, just because there's so many people who just don't qualify with the higher prices and rates, or their salaries haven't caught up. They're just barely making it, working 2 and 3 jobs maybe. So and bringing in some of the more investment into the job market eventually is going to go a long way in getting people out there buying properties. When they get married, they get their job, and then they're able to go out and buy a home. That's just kind of how it works, and then that creates kind of this micro in that area of all of the other things that you buy for your home, furniture, and all the other things that go along with home. So anyway, guys, I hope that helps and gives you a little bit better idea on pricing and where we are. I wanted to go a little bit more in depth with that, give you some extra figures and numbers and ideas on what's to come outside of our usual market update. So if you guys have any questions at all, let me know. I am happy to help with that. And I just had so many people saying, our home selling, and all that. Check out my most recent podcast. I kind of get into the numbers a little bit with our charts and stuff. Also, kind of where I think we're headed just by looking at the forward-looking data, purchase applications and applications for home loans and stuff. So take a look at that and take this information. Hope that all helps. And if you need more information about your particular zip code, city, area, neighborhood, happy to help. All right, guys, we'll talk to you next time.